Hi everyone. Testing, 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 testing. Okay, seems like everything is working just fine. Yeah, hi everyone. Welcome to today's webinar brought to you by IC. Okay, cool. We're gonna do a live analysis session today. Today's the 14th of January. Okay, we're basically going to go on the live charts and I'm gonna show you how I usually do my setups. Okay, so let's continue. You guys already know how this works. I do have to go through the disclaimer. Basically, whatever I share with you guys in these webinars should not be construed as any form of financial advice, any form of signal to buy or sell, or any form of investment advice or anything like that. Okay, this webinar is purely educational and nothing else. Okay, it's purely educational and nothing else. That means even though we are going on to the live charts and I am basically showing how I would usually get my setup, it does not mean it is a signal for you to enter for a buy or sell, because I will be showing like my entry, my stop loss, and my take profit. I'm basically showing you from a different perspective on how you can use this technique to apply it into your own analysis making. Okay, but please do not take it as a signal to buy or sell. Okay, and another risk warning: trading forex and CFDs carries significant risk, especially if you are trading on high margin. You may lose more than you intend to. Okay, so I'm gonna have to stay here for a minute or two so that you guys can read through the disclaimer. In the meantime, I will be back. I'm gonna go get some water. Okay, I'm back. I believe you guys should have been maybe a minute, one more minute. Good, everyone good with the disclaimer. If you guys are good, I'm going to continue. Okay, I'm gonna introduce myself, your host for today, which is myself. My name is Cassandra. You guys can call me Cass. I am an investment analyst at Everest Fortune Group. We are a research firm based in Singapore. So we have been recognized for the finalists for the best forex and best equity research for multiple years running. So what we do here is basically a lot of back testing, a lot of forecasting, a lot of like studying and understanding where the markets are going. It doesn't matter what it is. It can be cryptocurrency, it can be commodities, it can be stocks, it could be forex. Uh, our job here is to understand the markets as a whole and to kind of see where it's going and give our analysis to multiple platforms. So, yeah, if you guys have any questions regarding trading, how to do analysis, how to do your research, or whatever, do ask me in the chat box. I will try my best to answer you to the best of my ability. Other than that, I am also a prop trader. For those who don't know what prop trading is, it means that I have I am funded by multiple companies. How did I get that funding? I had to do 10% profit within a month. How did I do 10% profit within a month? I combine technical analysis with fundamental analysis. So again, if you guys have any questions, just ask me in the chat box. Don't be shy. Okay, so agenda for today is key approaches, which we will look at later when we go to the live charts. And more importantly is this cheat sheet. So if you don't already have this cheat sheet, if this is your first time here, I do recommend you guys taking a screenshot or whatever it is, so that you can use it for your own analysis making if you do decide to apply this technique into your analysis style. Okay, so first things first, we're gonna need these 3 parts. This is the most important part. So I am a trend trader. That means that I look for trend, either whether price is going up or down. That is very important to me. I first need to understand and I need to identify where price is going. So if price is indeed going up, then we will be looking for a buy. If price is going down, we will be looking for a sell. Okay? How do I look for direction and whether price is going on an uptrend or downtrend? I can use either a trend line or a channel. So for a trend line, you're going to need at least 3 touches, significant touches, for it to be valid. And then we have got a channel. So channels, you need 4 touches, 2 at the top and 2 at the bottom. So when I say top, I mean resistance, and the bottom, I mean support area. Okay, so once that is done, I will then pull out my horizontal levels, because that horizontal levels is what is going to help me look for my entry, my stop loss, and my take profit. Okay, entry, stop loss, and take profit. So I'm gonna when I say horizontal levels, I mean pullbacks, overlaps, significant swing highs, and significant swing lows. And one more thing is to combine Fibonacci levels to see if it lines up with any of the horizontal levels that I have drawn. Okay, so the more times that there is confluence in an area, the more likely price is going to reverse or bounce from there. Okay, so once that is done, I will then see if there are any chart patterns. So when I say chart patterns, I mean wedges, triangles, double top, double bottoms. These are just examples, but there are way more examples that you can use. Head and shoulder, inverse head and shoulder, teacup, okay, whatever it is. There are many chart patterns, as long as it helps you to bring your analysis to higher probability. That is the whole point of using chart patterns. So once that is done, I will then pull out indicators. So the indicators that I like to use is the 200 and the 50 moving average to look for death and golden crosses. Okay, this will give me a directional bias. Hi Jamilu, long time no see. Hi. Okay, and any natural moving averages. I don't really use this, but if there's an opportunity, I might. Okay, then we've got stochastics and RSI. We're basically using stochastics and RSI to look for bounces and reactions or any kind of reversals, and then to look for divergences. So for divergence, that means that if price is moving up on the charts, but on the oscillator it is moving down, it could be a possible sign that the oscillator is telling you that, hey, there could be a trend reversal. Okay, so once I'm done with the indicators, I will then see if there are any form of correlation. So first example will be any strongly correlated currency pairs that are supporting your bias. Okay, an example will be EUR, USD. If I'm getting in for a buy for EUR, that means I want the euros to go up in price and the USD will be dropping in price. Okay, similarly, that means I also want the DXY to drop in price, because DXY is basically the charts for the US dollar index. Okay, so other than that, any strongly correlated asset class supporting against your bias. So this could be a combination of currency and commodity. A very good example for that is Canadian dollars and oil. So Canada is a very, very big producer of oil, okay, in the world. Okay, so the prices of oil usually is tied to the prices of the prices of Canadian dollars is usually tied to the price of oil. If oil prices go up, Canadian dollars will go up as well. If oil prices go down, so will the Canadian dollars. Similarly, with Australian dollar and New Zealand dollar, there is correlation there. If the Australian dollar drops in price, New Zealand dollars usually follows in the same direction. Obviously, it's not going to be side by side. There's going to be a bit of lagging and there's going to be a little bit of differences because they are, at the end of the day, two different countries and their own local politics or their own local affairs needs to be taken into consideration as well. But in general, you can say that New Zealand dollars follows the direction of the Australian dollars. Okay, so these are example of correlation that you can use if you were to do analysis on any of these charts. So once you are done with all of this, you then decide whether you're going for a reversal or a breakout. Basically, that's the front part as well. You would already decide whether you're going for a reversal and a breakout, and that's basically how I would look for an analysis. And let me show you how to apply this entire analysis technique onto the charts. Okay, so thank you. I'm gonna keep this here. Let me pull out trading view. Let me pull out trading view. Okay, guys, let's see if we got sorry, I pulled out the wrong chart. Give me a minute. Okay, there you go. So I'm always very transparent with you guys. I'm always very transparent with you guys. Anytime I do an analysis on here, I do not change anything and I come back the next week and then we review whatever I did the week before. So this was goal last week. This analysis was done last week. I took you guys last week on Wednesday, right? And last on the 7th, yeah, I took you guys here. Wait, did I take you guys on the 7th or did I take you guys on Monday? Last week. I think last week was on Wednesday. Okay, so looks like everything worked out really well. I did say my entry is this red box. If you zoom in, it kind of missed the red box by a little bit. Okay, it missed the red box but a little bit, but I would consider this trade successful because direction wise it just played out exactly as what I forecasted, which is that price is going to pull back to this red box, and from this red box then there's going to be a boom in direction. So obviously that red box could have been improved. Okay, the entry could have been improved a little. Maybe I could have made it a bit higher. Maybe the box could have been wider. Okay, whatever it is, generally the entire idea was correct. So let's see if we can do that again today. Okay, let's see what else we did last week. So I don't remember exactly what we did last week, but I do know every single week we do go through the same charts, which is gold, which is one commodity. I think ETH USD, right? For those who were here last week, just let me know if you guys remember. Okay, did not work out. Low probability setup indicators are not aligning to analysis. Okay. I mean, I did say it's a low probability setup. Take note, I didn't get on and off any on this trade last week because why did I not trade last week? I think I was traveling. Yes, I was traveling. Right. So last week I took you guys on Monday. on the 5th. Because the reason I did that was because on the 7th I was traveling. Now I remember. Okay, so we didn't do euro last week. Let's see if we can do it this week. Okay, I'm pulling out euro and euro USD and then DXY. Let's see what ETH, let's see what gold is doing. So I am still biased that gold is going on an uptrend. There's no reason for me to suddenly think gold is not going to go on an uptrend. For very obvious reasons, it has done a break of structure. Okay, let's delete everything, remove everything. Okay, so it's very obvious gold is clearly on a very long uptrend. So right now I'm going to look for a buy entry. The question is, where do we get in for a buy? Why am I looking for a buy entry when gold is basically at a swing high right now? Because, and how am I going to do that? Because you guys have to remember, price is constantly moving in a zigzag. Okay, price is constantly moving in a zigzag pattern. That means if it goes up, it needs to pull back a little and then go up again. And it's going to pull back a little and go back again. So when it pulls back, I want to enter here for a buy. Okay, I want to enter at the pullbacks for a buy. So your job or my job right now is to identify where XAU USD is going to pull back to. So directional bias I already have. I did say that I was a trend trader, so trend is very important to me. Directional bias for gold is so obvious for like so many weeks already. We have been following gold and it's been showing that it's an uptrend. The next question is it going to pull back before continuing up? I don't know. Let's find out. Okay, so it's constantly moving in a zigzag pattern, right? It's constantly moving in a zigzag. We need that pullback so that we can enter. Give me a sec. Okay, I'm gonna pull out the cheat sheet that I was saying. So I already have my directional bias, which is an uptrend. Let's use a trend line or a channel to see if we can get a better structure of where, or like kind of narrow down where price is moving. Okay, so if I pull this trend line like this is what I'm getting. But let's see if I can draw it a different way. If I draw it this way, okay, so you guys shouldn't be too rigid with how you're drawing your trend line, because trend lines are very subjective. 2-3 people can come on the charts and draw the trend line totally differently. Okay, so I'm trying my best to connect all the dots together. I'm trying to connect this part, and this part together, and I think this is the best that I could get. So remember, I did say you need 3 significant touches. I would consider these significant touches: 1, 2, and 3. Okay, so 1, 2, and 3 significant touches. I would say this is a valid trend line. So we're done with the trend line. Do I want to try pulling out a channel? Sure, why not? Like, even a channel would work. Okay, so if I did not want to use just this trend line, both a channel and a trend line would work. Okay, I mean, I guess we can use the channel. Channel will be better because it also helps you mark out the top part, which is the resistance part. Okay, so ideally, if price were to continue moving within this channel, it should look something like this, right? Okay, so it shouldn't go above this, it shouldn't go below this if it's going to respect this channel. Okay, so once that is done, I now need to pull out my horizontal levels. Horizontal levels, let's pull out the horizontal ray. What am I identifying? Swing lows and swing highs. That's all I'm identifying. Swing high, swing lows, overlaps. Okay, that's all I am identifying, honestly. Okay, if you guys remember what I always say, support and resistance is never one single line. Okay, it is always a zone. So what I'm doing here is trying to connect this swing low here, because it doesn't even look like a very clean swing low. It looks like a very weak one. It's not significant. And this swing high here. Okay, so to give me this zone in this purple area. Okay, so if anything, if price were to pull back, I'm hoping it pulls back to this purple zone. Okay, let's see. Price is at all-time high right now. Yeah, so the thing is, price cannot just shoot up in one direction. It has to move in a zigzag. The question is it going to pull back now? Does it want to go up a bit more before it pulls back? I don't know, but I do know at this current point of time, let's see. Okay, actually, let's see. Okay, we've got some of our levels. Now we're going to pull out Fibonacci levels. I'm going to take the Fibonacci retracements from here to the swing high to see if there are any levels that make sense. I mean, let's see if I can get anything else. So it's 78.6, 100, 122. I'm gonna change this all to blue so I don't get confused. What am I doing right now? I'm basically looking for an area or zones where all the Fibonacci levels are lining up in the exact same place. Okay, if I can find an area where the Fibonacci levels are all lining up in the exact same place, and better yet, if it lines up where the horizontal levels are, then that's most likely where price is going to go and reverse off. Okay, so I kind of see this area here, this area here. I'm gonna get rid of the other zones. I'm gonna get rid of this 50%, 61.8, 78.6. Gonna get rid of this 78.6. Nope, 50%, 23.6, 127.2. Okay. Narrowing down this zone. Okay. Okay. I think if price were to pull back right now, if it were to pull back right now, which I don't know if it's gonna pull back right now, I'm guessing this is the area I want to look out for a entry. Okay, I know you'll be like, wait, if the entry is right there, doesn't it go outside of channel? No, not really, because remember, it really depends on how you draw the channel. If I adjust it a little bit, the channel can do something like this and it would still be valid. Okay, it would still be valid. Okay, so I'm more biased for it pulling back to A rather than B, because B is way too far from where this channel is. Okay, remember, ideally if price were to continue moving within the channel, it should move like this, right? Right? So if it comes to B, then that's way outside of the channel. Okay, and that means the channel wouldn't really make sense anymore. So assuming that this channel is still going to hold structure, I'm thinking my best bet would be to aim for this entry here rather than this entry here. That being said, I'm not saying that it's impossible for price to get here. There is still a chance that price might get here, but looking at what information we have, I'm more biased that price is going to come here and then reverse from here. Okay, but again, there is still a possibility it might just come here. okay? Because even if it comes here and reverse, it still wouldn't break the trend. Because what is the trend? The trend is, it is an uptrend, right? What constitutes an uptrend? Higher high and higher lows, right? So even if it pulls back to here and it reverses, it is still making a higher low. It's just that it's not following structure very well, but it is still respecting the higher high, higher low. So there is still a possibility that price could still pull back here. It's just that I'm more biased to this one because then it would respect this channel. Okay, but then again, you know, sometimes when things look too clean, a lot of time it ends up being a scam. You know that, right? Like, even in trading, sometimes when it looks so clean, it looks like so good to be true. It looks like, this is like literally textbook. So if you study textbook technical analysis, you will know that oh, price is just nicely moving within the channel, right? Price seems to be nicely just moving within the channel. That is just like classic textbook. And a lot of times when it's classic textbook, it ends up becoming a trap by institutional traders. Okay, why are the institutional traders trapping people like you and I, the retail traders? Because trading is a zero-sum game. Okay, it is a zero-sum game. That means for somebody to make money in trading, somebody has to lose money. If I was going to make $10 in trading, someone somewhere has to lose $10 for me to make the $10. So that's why a lot of times a lot of traps are being set. Like, you think this is the entry, you think this is the entry, but actually the real entry is this. You think A is the entry, but the real entry is B, because they want you to get stopped out. So you're going to put your stop loss here under A, and then you're going to get stopped out and price is going to go to B and then reverse, because the institutional trader wants you to hit your stop loss so that there is money to be made for them. Okay, cool. So going back to the cheat sheet. Okay, I'm done. Let's see if there's any chart patterns, death or golden cross and natural moving average. Okay, do you guys see any chart patterns? I personally don't see any chart patterns. Right? Nope, I don't see anything. If you guys see any chart patterns that I don't see, let me know in the chat box. Okay, don't see any chart patterns. I'm gonna pull out the 50 and the 200 moving average. Okay, so it's very simple. How you use this is you go into the settings. So 200 is the white, 50 is the green. Okay, you basically need 150 and 200. If the green is above the white, it means that we are on an uptrend. That's it. Okay, if the green is above the white, it means that we are on an uptrend. If the green is below the white, it means that we are on a downtrend. That's basically how you use the 50 and the 200 moving average to decipher trend. Okay, it's that simple. Okay. On top of that, I actually think I can look for a moving average. So remember, I'm gonna get rid of this because it's already supporting our bias. Okay, so remember I said other than that you can use a natural moving average. How do you look for a natural moving average? So you pull out the moving average. Okay, let me make it thicker. I don't know why it's so, I don't know why the line is so thin. Okay, let's change it to red. Okay, you are basically adjusting the settings based on the movement of the charts. Okay, you want it to look like it's flowing with the charts. I don't know if that makes sense. Okay, that's not flowing with the charts anymore. Let me try to make this flow a little better. I guess. Okay, why did I choose 32? Okay, let's go back. Look for at least 3 bounces and reaction for it to be a valid natural moving average. Okay, so I've got 1 bounce here, 2 bounce here. This one barely touched, but I guess I can count it. 3 bounce here. This one went out a little bit. 4 bounce here. 5 bounce here. Okay. Yeah, so I would consider this a valid natural moving average. Obviously, if you go into the settings and you kind of tweak it a little, you move it a little more, you can probably find an even better settings. Okay, don't really, I think the 32 was the best I could find. Okay, I think 32 was the best that I can find. I need 3 touches and I already found my 3, which is 1, 2, it cut out a little bit. I will still count it 3. This one barely touched. I guess I will count it 4 and 5. Okay. Okay, this is an example of a natural moving average. So how do you use a natural moving average? You basically use it like a support and resistance. Okay, so if price were to come here and this moving average just so happened to do this as well, it should come here and bounce. Okay, so far I'm pretty happy with this analysis. So far it's looking pretty good. Okay, now let's pull out stochastics and RSI. Stochastics and RSI. I'm going to get rid of this. Stochastics and RSI. Stochastics and RSI. To see, for stochastics, the settings that I use is 21, 5, and 3. I find that this is it's a smoother settings. Okay. What am I looking for stochastics? So I'm looking for bounces and reactions. How do I look for bounce and reaction? I first need to mark up support and resistance. Nope. I first need to mark up support and resistance. Okay, so you can see this is an example of support and resistance. So every time price touches this red line on the oscillator, on the charts, it's supposed to do the same thing, which is reverse. Okay, here it touched, it's supposed to reverse. Here it touched, it reversed a little bit. Okay. This one barely touched a little and then it reversed following the chart. So here it touched and you can see here it touched and reversed as well. And now we're reaching another top and then it should reverse. Okay, so stochastics honestly isn't giving a lot of information. RSI. I don't see very useful information either. Okay, since I don't really see anything with stochastics, the next thing I'm in terms of like bounces and reaction, I now look for divergences. So divergences means that if price is moving up and on the oscillator it's moving down, it means that oscillator is trying to tell you that there is a trend reversal. Okay, so price is moving up, oscillator is also moving up. Okay, price is moving up, RSI is also moving up. Okay, so no confusion here, no divergence here. So far, so good. So far, everything is looking a little too good, if I'm being honest. Okay, a little too good. Okay, so what I think is going to happen is that price is going to move up a little bit more, probably a little bit more, because just now when we were looking at the stochastics and RSI, it looked like there was a bit more room for price to move up to. And then from there, I will start to see a drop. And here will be my ideal entry. Okay, so, okay, this is my rough idea of what I think is going to happen with gold. Pull this out to see if anything other correlations. Okay, what is the correlations for gold? The correlation for gold is actually cryptocurrency. Okay, wait, actually, what is the correlation or inverse? Yeah, okay, gold, DXY, S&P shows a strong negative inverse correlation with the US dollar index. I guess we're all learning new things, are we not? Okay, so the correlation that I personally know that if gold is going up, usually cryptocurrency should be going down in price. Why? Okay, cryptocurrency should be going the other direction. Why? Because gold is considered a safe haven asset, and cryptocurrency is considered a lot of people it's considered risky. To some people it's considered safe haven. Okay, so therefore it should go the opposite direction of each other. Okay, but then as you can see, it says DXY, strong negative correlation. That means if gold is going up in price, DXY should be going down in price. Is that the case? Let me see. I mean, yes, I guess DXY has been going down, but right now it's doing a pullback. Let's see what DXY is doing. DXY is actually moving up, and gold is also moving up. So I don't know where the correlation is. Sorry, that's not DXY, that's EUR. Oh, no, wait, that's DXY, right? I don't know where the inverse correlation is because they are both moving in the same direction. Okay, so yeah, we're not going to use this as a correlation because it seems like they're both moving, an inverse correlation because they're both moving in the same direction. Because it says strong negative correlation means that it should be moving in the opposite direction. Okay, it's okay if it's not working. We're not going to use information that's not accurate. Okay, so this is the only thing I can come up with for gold. Let me see. Reversal or breakout. I'm looking for a reversal. Okay, so when price gets here, I'm gonna look for a entry for a buy. My stop loss is going to be here, and my take profit is going to be, okay, see, the thing about gold is that we are right now currently at all-time high, right? Gold is currently right now at all-time high. This is the highest number that price has ever been, ever. Okay, I'm just gonna randomly choose a chart so that I can show you guys what I'm talking about. Okay, see, this is the monthly. Gold is currently at the highest point that it has ever been. So the question is, how much higher is it going to go before it's time to pull back? Okay, it cannot just keep going up in a straight line, right? It needs to pull back because price is constantly moving in a zigzag pattern. Okay, so actually it's good that we are here on the let me see where I think the next target is going to be, if I can even find a next target, right? Let's see if I can even, yeah, no. I know gold is going up, but where is it gonna stop before it decides to pull back? Okay, that's okay. We are on a very small time frame, so we shouldn't be too concerned about this. Okay, if gold pulls back and I'm looking to enter for a buy, the next question is, okay, I've already got my entry, I've already got my stop loss. My next question is, where do I put the take profit? Okay, is it going to go back to the all-time high? Or should I just be a bit more conservative? Okay, I'm going to be a bit more conservative because we're already at all-time high. I don't doubt that oil is going to go even higher, but to be very conservative, all-time high means that that is the new resistance at this current point of time. Okay, and I don't want to test it out. Okay, I don't want to be the person that tests it out. Okay, so I'm going to put my take profit here where this swing high is. Okay, you see where this swing high is. I mean, alternatively, I could put it here at this swing high as well. But to be very, very conservative, I think this should be good. Okay, it looks like it's an okay risk to reward. Yikes, risk to reward sucks. There's two options right now. Aim for a better entry. Okay. Tighten the stop loss a little bit, but not to the point where it doesn't make sense. Just a little bit. And yeah, I think 2.5. I think that's healthy. Okay, so what I did was to tighten the stop loss a little bit, to play a little bit tighter stop loss, where there's still a good chance that I won't get stopped out. Obviously, if you give it more breathing room, the chances of you staying in is higher. But this is still, I mean, if the analysis is correct, it should come here and reverse, right? Unless we get wicked out. Okay, unless I get wicked out. Okay, so I'm going to, yeah, I think 2.5 is healthy. So I think this is what I'm gonna end up with gold. I personally think everything is lining up. Okay, indicators all pointing in the same direction. Chart pad, I mean, the charts are pointing in the same direction. Everything is looking good. The question is, the only concern possibility of getting wicked out. Okay, there's always going to be risk. Every trade, there's always going to be risk. Okay, so if a candle comes here, there is a possibility it might wick, you know, like this super long wick. That wick might just touch the stop loss and then go in the opposite direction. Okay, so it could be this wick. Look at this wick here. Look at how long that wick is. So there is a, look at how long this wick is. Okay, there's a possibility of getting wicked out. I might still end up being correct, but there's a possibility of getting wicked out, because I wouldn't say it's a very tight stop loss, but the problem with gold is that gold has this characteristic where it likes to do really long wicks. Okay, so if you guys go back, you guys can see long wick, long wick, long wick, and that wick can really just stop you out and then continue in the other direction. Okay, so that's the only concern I have. Otherwise, I'm pretty happy with this setup. Okay, I think this is a high probability setup. Okay, this is a high probability setup. My only concern is the possibility of getting wicked out. Look, I can put my stop loss here, and if I'm correct, I'm not going to get wicked out, right? But then my risk to reward wouldn't make sense anymore, right? So sometimes I'm okay to risk a little bit more to make more as well, if it makes sense, right? If it makes sense. It can't be that I put my stop loss here, then that doesn't make sense anymore. Like here, it's still a healthy breathing space for the stop loss. It's just that hopefully we don't get wicked out. Okay, so that's all I have for gold. I see you guys next week to see if it worked out. Let me move on to the next chart. We've got like 15 minutes left, and then okay, let's look at Ethereum. I was hoping Ethereum does go down first. Okay, we are in a key area. We are in fact right now in a key zone for Ethereum. If Ethereum breaks this purple box, it is most likely going to go higher. So if Ethereum can break 3450 zone, it is most likely going to go higher. Otherwise, we are still in a downtrend, honestly. It's not really complete yet. See, it's kind of moving in a triangle almost. It is still moving in a triangle. Okay, so it needs to break out right now. It needs to break out right now, and then my next analysis for Ethereum is going to be a buy. But unless it can break out, my bias is that Ethereum is still going to continue moving within this triangle until it reaches the end before it does an actual breakout. Okay, so because I kind of have this already, this triangle in place structurally, let's go back. So let's start again from zero. So every chart, so I've already got a chart pattern here, which is a triangle, right? I've already got a triangle. Price is moving in a triangle. It's a very clean triangle. Actually, in fact, it's a very, very clean triangle. Let me try to adjust it to the best of my ability, because you want things to be as clean as possible. Okay, no, I have to go back to the daily to make it more accurate. Yeah, sorry, this is as good as I can get the triangle to look. Yeah, that's as clean as I can get the triangle to look. Yeah, that's as clean as I can get it to look. Because of this triangle, so we've already got our chart pattern, we've already got our trend line channel. I mean, there is no trend line channel because price is moving in a triangle. So the trend line and the channel will both say that it's a downtrend and an uptrend, because that's the whole point of a triangle. Okay, any horizontal levels, so pullbacks, overlaps, swing high, swing lows, and fib levels. Okay, let's do the horizontal levels. We are at a horizontal level right now, a key level right now. We are at a very significant key level at this very point of time, which, like I said, is the purple zone. Okay, it needs to break this purple zone for me to know that it's gonna go higher. Otherwise, if it doesn't break, it means that it's just gonna go back and retest the other end of the triangle. Okay, so I'm gonna give my honest opinion of what I think is gonna happen. I don't think Ethereum is going to break this purple zone. Okay, why? Because you can see here, it was rallying, and then it just loses momentum, and then the next candle is a doji. Okay, it loses momentum and it's like losing strength. It's like losing its strength to continue higher. Okay, so I think it one day will definitely break this purple rectangle, this purple zone. I just don't think it's going to be today. Okay, I personally don't think it's going to be today, but that's just my bias. Let's pull out other things to see if my bias makes sense. So how do I pull it out? Death and golden cross. Let's see what the moving averages are saying. Okay, if green is above white, it means that we're an uptrend. Okay, oh sorry, yeah, if green is above white, it means that we're an uptrend. But the thing is, you cannot, I won't say this is accurate information. Okay, so indicators, no matter what you use, it doesn't matter if it's moving average, Ichimoku, whatever it is, yada yada, stochastics, RSI, they will never work 100% of the time. There will be times when they are wrong. Okay, if they work 100% of the time, it's gonna be so easy to make money because you just follow it every single time and you're gonna make money every single time. Okay, so how do I know this moving average is not working at this current point of time? You can see the green crossing the white, and then now crossing back the white, and then now crossing back the white again. Maybe now it's gonna cross the back the white again. Okay, why? Because moving average doesn't work on sideways market. Okay, moving averages, number one, is a little lagging And number two, it does not work on sideways market. It works on trending market. So you see when this green cuts this white here, it just continued to drop and drop and drop and drop and drop. Okay, so this worked really well. But whenever price is moving sideways, like you see here, that's when the moving average stops working. Therefore, I'm not going to use the moving averages information to make my decision because it's not going to give me accurate information. Let me pull out. Same for Ichimoku. Ichimoku doesn't work well on sideways market. You see how price is this way, it cuts the cloud, goes back in, cuts the cloud, goes back in. Okay, it's not giving accurate information at this current point of time. I think when it's sideways market, I think my best bet may be oscillate, maybe stochastics, maybe RSI. That's my best bet of anything working in a sideways market. Okay, how am I using stochastics and RSI? Every time it reaches a resistance, okay, reaches a resistance, it's supposed to reverse. So let me see if that's true. Every time it came here, here it reversed as well. Okay, the first one was kind of true, it kind of made sense. Came here, when it reached the peak here, it also reached the peak here. When it reached the peak here, it also reached the peak. When it reached the peak, it didn't really reach the peak. It didn't really work well there. When it reached the peak here, it didn't really work well here. Didn't really work well here. Didn't really work well here. Okay. Didn't work well here. Didn't work well here. Okay, we cannot use stochastics. It's not working well either. Okay, you only use indicators when they are working well. If they're not working well, it means it's giving you inaccurate information. That means you shouldn't use it because then you're collecting data that is not accurate. Let me see if I can get anything else. Nope, nope, nope. Similar for RSI. Okay, use this. It's just that it's not really helping. There's no correlation that I can think of. US dollar, yeah, obviously, because it's Bitcoin. Yeah, I mean, I know it's going to be correlated to Bitcoin. Okay, there's no correlation that I can really use other than Bitcoin. So everything that we used here, we already tried and it didn't give us information. It didn't give us more information. Okay, so now I'm gonna have to come up with something anyways because I've already tried everything on my cheat sheet. I've already tried everything on my cheat sheet. It's just that it's not really helping. Why? Because Ethereum is just going sideways. It's just moving in its triangle. So I cannot force it to go. I cannot force it to trend. Oh, by the way, this cheat sheet, right, works very, very well on trending markets. So either an uptrend or a downtrend. When it is ranging and going sideways, it's not going to work very well. There are other methods to trade sideways markets. That is the Wyckoff method or whatever other methods out there that's available. This cheat sheet is not going to help sideways market. So a triangle is kind of considered a sideways market. That's why the cheat sheet isn't working very well. Thanks, Jamilu. See you next week. Oh, Jamilu, before you go, next week will be on Monday, okay? Monday, because on Tuesday and Wednesday, I'm traveling and I won't be able to take you guys on Tuesday or Wednesday. So I'll see you guys next Monday. It should be morning, like Singapore time morning. I'm thinking 11 a.m. Singapore time. Okay? 11 a.m. Singapore time next Monday. Okay, I'm telling you guys, for those who are here, you want to join my webinar next week, it will be 11 a.m. Singapore time because I am traveling the next few days and I won't be able to take you guys then. Okay, so I'm gonna just come up with my bias. I think it's gonna be down. Yeah, I I think it's a down. This is going to be my entry. I actually don't think this is a. Obviously, the higher you can aim, the better. Okay, my stop loss is going to be right above this zone. Okay, look, if it really breaks this purple zone, it means that we are in a buy. But I think it's going to have a hard time. I'm not saying it cannot break the purple zone. I'm just saying it's going to have a hard time breaking it. Okay, my take profit will be back at this area. So this looks like a really not bad trade. It looks like a 1 to 2.5. Let's see if I'm right on the ball. Okay, it's a 1 to 2.8. I mean 2.5-ish. 2.8. Okay. Why do I think it is a sell? Because price is moving in that triangle. I really don't think it's time for a breakout yet. If it's time for a breakout, it's very obvious, right? You won't suddenly see this loss of strength in the candles, okay? Like it just suddenly lost strength. Super strong green candles, green candles, green candles, and then a doji, right? So the candles are telling you a story, and the story that I'm getting right now is that there is a loss of momentum because price is having a hard time breaking this purple zone. Okay, so I'm gonna stick with that story that I have. It's that this purple zone is hard to break at this current point of time. Eventually, this purple zone will definitely be broken, but at this current point of time, I think Ethereum is having a hard time breaking it. And therefore, I think because it's having a hard time breaking it, somewhere within this purple zone can be my sell entry, right? Somewhere within this purple zone. Obviously, the higher you aim, the better your risk to reward. And your stop loss is going to be right above the purple zone because look, if I'm wrong and it really breaks the purple zone and goes higher, then I'm wrong. And the next time I see you guys, next Monday when I take you guys, I will look for a buy entry. Okay, but at this current point of time, I still think it's a sell because I don't think it has the momentum to break the purple zone yet. Eventually, yes. Today, I don't think so. Therefore, I think the sell is anywhere from now or a little bit sooner. Okay, take profit. To be very conservative, obviously you can aim for the bottom of the channel. I mean the triangle. Obviously, if price is moving within this triangle, it is supposed to move back to this bottom, right? But just being very conservative, I'm just aiming back at the last swing low. Or to be even more conservative, maybe you can just aim, I could just aim even slightly higher. Okay, that will make my risk to reward a bit lower, which is 1 to 2. Still not terrible, but obviously, okay, if you aim for higher and this lower, okay, that's still not terrible, honestly. 1 to 2.5 is still not terrible. Okay, so yeah, that's all I have for you guys today. I've got 2 more minutes. Let me see if I can quickly come up with something for EUR. What do I think EUR is doing? Let's see. I mean, it's definitely moving in a downtrend on a bigger time frame, right? It's moving in a downtrend on a bigger time frame. It's moving in a very nice channel, actually, right? See, it's a very clean channel, in fact. Okay, if price was really going to respect this channel, it should be going down. Okay. I mean, it is look like it's going down. Okay, if I have to come up with something really quick for EUR, Okay, I think probably a breakout strategy. Okay, it needs to break this structure here for me to confirm that it's going to further move down. If it cannot even break this swing low, then I think I'm gonna stay out for now until the next time I reanalyze this. But I think there's a good chance that if it breaks here, the directional bias will be down. Okay, so that's all I have for you guys. I will see you guys next week. Remember, okay, reminder, friendly reminder, okay? Only next week because I'm traveling, so I really cannot take you guys on the original schedule. Okay, so that's all I have for you guys. Thanks, guys. Take care. Bye. See you guys next week. Monday, 11 a.m. Singapore time. Okay, bye. Take care. See you.